Your Excellency, welcome back to CNBC. It's good to see you.
Thank you, Dan, for having me. It's a pleasure.
Your Excellency, we're at ADIPEC 2025. Walk me through your observations and some of the key themes that you're hearing and seeing on the ground this year.
Well, I've been to ADIPEC for the last 4 years, and I think I can summarize it by saying there's been a big shift in the tone and the narrative that we're hearing from industry leaders, government heads, representatives, compared to what it was like 3 years ago, I would say. 3 years ago, it was all about energy transition, climate change, get rid of fossil fuels. Today, it's about we have to have a balanced approach. Today, it's about we need more energy, all sources of energy. We need investment to be ready. So it's a very different tone, which I think, I must say, sounds like music to my ears, because this is what OPEC's been advocating for the last 2, 3, 4 years, actually.
When you and I last spoke, a couple of years ago at this conference, you called for more investment in the energy space. Do you feel validated by that call? Because that appears to be what the industry is really crying out for now as well.
Well, absolutely. I think it proves that our forecasting was absolutely spot on at OPEC. We've been calling for additional investments in the oil industry for many, many years. And in fact, we see the requirement for investments in the oil industry rising compared to what we saw a couple of years ago. This year, in our outlook, we're seeing investment requirements out to 2050 in the order of magnitude of $18.2 trillion. And that's for upstream, downstream, midstream, logistics, you name it. And I think it's not just for the oil industry, but also for the gas industry, for renewables. And our approach at OPEC has always been about all energies. We need to invest in all energies because we believe, and we have demonstrated with facts and figures, the basic fundamentals that all lead to one direction, that the world is going to continue to grow, the economy is going to double in size compared to what it's like today. We're going to have 2 billion people, additional people on the planet by 2050, and there's a rapid urbanization move that is unimaginable. With cities being created in the growing parts of the world, in the developing countries, this leads us to a conclusion that the world is going to require an additional 23% global primary energy demand by 2050. And of course, oil will definitely play a part in that, where we see demand reaching 123 million barrels a day by 2050.
What we're also seeing is enormous compute capacity now being installed and invested in, and in parallel, energy demand is rising. How is OPEC responding to this new AI wave?
Well, that's another additional fundamental fact that's now surfacing in the last couple of years. People talking about artificial intelligence, data centers, data mining, all of that requirement. That's only going to put an additional burden and stress on the existing grids, the power lines, the delivery of the fuels required to deliver that energy and electricity. So that only reinforces our view that we need to invest more in all sources of energy. The world's going to need renewables, it's going to need oil, it's going to need gas, nuclear, you name it. Whatever energy is going to be out there is going to be required. With the addition of additional requirements for energy like AI, which we are still, by the way, we're only at the tip of it because it's only the beginning. We don't know how this will evolve in a couple of years or after 5 or 10 years, how much additional demand that's going to create. But I can tell you for fact, some countries already, they've had AI and data mining in consumption of electricity exceeding the consumption of electricity in some of their major cities. And that's just to give you a taste and a flavor of how much additional energy is going to be required just for AI and data mining. So definitely, I think the energy industry out there has to invest much more to be ready for the growing requirements for this field.
Dan Yergin called it a paradigm shift for the entire industry. Would you agree?
Totally. I think this is what I said in the beginning. I think we're seeing a big, different lens from which people are actually now viewing things, more realistic, sensible, pragmatic approach to visualizing how the world is growing and evolving. So definitely there is a paradigm shift, I would say, and everybody I've spoken to here, everybody I've listened to, has been feeling the same thing.
Do you think the industry is moving fast enough to meet this rising demand?
Probably not. I think in the oil industry, I can say definitely there's been a lack of investments over the past 5-6 years, at least since 2020 when COVID was hit. And I don't think we ever reached the levels that were pre-COVID requirements for investments in the oil industry. There has been a pickup, definitely, but it's still not to that same level. Let's remember, I always say this, that we need to invest today just to be able to manage the stable, constant level of production that the world does today because of the natural decline that we have in maturing fields all over the world, let alone to be able to be ready for the future demand.
Your Excellency, let's talk about the latest OPEC decision as well. OPEC has decided to add more barrels in December. It'll also be pausing in Q1. What's behind this latest decision?
Well, I think it was a very good decision. The feedback I've been hearing from people in the market is that it's a very wise decision, very well structured decision based on fundamentals of the market. And this is what we always do. I mean, our ministers meet on a monthly basis in the group of 8 countries that have taken on their shoulders the burden of those additional voluntary adjustments in the past, which are now being gradually returned to the market as the market requires additional volumes. Therefore, when we look at the fundamentals, we see oil demand growing at 1.3 million barrels a day. Yes, there are people there who think our numbers too high, but I'm going to go back and say I think their numbers are too low. And I think the market is proving that there is a requirement, and the market has absorbed the barrels that we have been replenishing or returning to the market very nicely over the past 6 to 9 months. So the decision was basically to reflect the seasonal slowdown, I would say, in intake of crude because of the maintenance that happens gradual. You know, there's a big global maintenance in refining for turnarounds and maintenance that happens every year in Q1. So the decision was aligned with that situation, which is nothing out of the norm. Anybody who follows the oil markets would be definitely comfortable with such a move. I think it's a wise decision and it's been taken very nicely and well by everyone.
Well, this is also seasonality as well, right? Because this is a similar pause that the group took at the start of this year.
Correct. Yes, the seasonality is part of this phenomenon that I explained where we have the maintenance and all. You are right, in Q4 and Q1 usually demand does kind of slow down. And we have an uptick in Q2 and Q3 every year, yes, the seasonality element.
What did you make of the market reaction? We still see oil prices holding at around this $60 a barrel handle. I know you don't specifically move the price or track what's happening with prices, but walk me through the market reaction. What do you think investors are responding to?
Well, what I'm hearing is that everybody is really happy about the decision and that the decision was a well thought out decision through a well thought out process and reflecting the seasonality as we discussed. And there are many fundamental factors and non-fundamental factors that impact the price. We don't get involved with the discussion about what price levels. I mean, the market really sets the price ultimately. There are narratives out there talking about a supply glut. They've been talking about it for the last 2-3 months, trying to push that narrative of a glut in some media circles and so forth. And we don't see that glut, Then it's become about oil on water and the volumes coming out about oil on water and then adjustments of oil on water. So I think there's a lot at play there that has been tampering with the prices, if I may use that term.
So you think talk of a glut is being overblown?
I think so. I think the fundamentals demand is still strong. We're going to see, last week we saw the US EIA and API stocks, significant drop in crude and products. And we're in November already. So this is a sign that there is additional demand. We're seeing OECD inventories compared to the 5-year average still at around almost 200 million barrels below the 5-year average, which is very healthy levels. Demand, as I said, we're seeing growth of 1.3 million barrels a day year on year. And we're seeing that others who have had very low numbers towards the beginning and middle of the year are slowly adjusting upward their demand figures.
So what's OPEC's message to the market now?
Well, the usual message we always have is that OPEC is here, OPEC Plus is here. We've been here since 2017, working closely to make sure that the market's always well balanced, stable. And this is, not only in the interest of OPEC Plus countries, but it's also to reduce that volatility. I think oil, by the way, has been the least volatile commodity compared to other, commodities like gas or coal over this past year or two. And that's greatly down to the efforts of OPEC Plus. So we are here assuring the market that we will be there, watching out for the market, making sure that we have a stable platform of stability, actually, which will incentivize future investments in this important industry.
And speaking of investments, one other thing I wanted to ask about is, given the trends that we're seeing in artificial intelligence right now, obviously a key focus here at ADIPEC, there is a possibility that inside OPEC itself, we could end up in a situation where there are haves and have-nots. The UAE and Saudi Arabia, of course, investing heavily in artificial intelligence. There are other countries inside OPEC that are not able to do so. What is that going to mean for decision-making inside this group?
I don't think that will have an impact on decision-making as per se, but and I wouldn't characterize it as haves and have-nots. You know, AI, as I said earlier on, is probably something that's still picking up. It's a new trend, if I may use that term. It's a new thing that's available out there. Now, some countries will adopt AI in their production, in their operations, in their oil industry. Some will not. So that's a decision that each country will have to make. And I don't think for us at OPEC, our core focus is on production, management of the market, but we don't get involved with really how a country manages its operations through AI or not. That's an individual decision that each country would have to make. So we will see this trend really picking up. I think every country, every company will find its own way of how it can benefit from AI and take advantage of these tools that are available and technology. And this is an evolutionary process that, you know, I mean, oil production in the 1950s and 60s is definitely not like it is today, nor like 10 years ago, you know, with the evolution of fracking, hydraulic fracturing, and so forth. And these things, I believe there's a constant evolution. Now the future is going to be how we can integrate AI into our operations. And we're seeing some that are already steps ahead, but others, and we always collaborate together as a family within OPEC, OPEC Plus. We have various platforms where we exchange knowledge and information. I think other countries will slowly start to pick on these same, you know, tools that will help them and to improve efficiency, lower costs, increase production. I think that's coming slowly.
And of course, AI and geopolitics also very closely related as well. To what extent is geopolitics influencing the OPEC decision-making process right now, whether that's these new sanctions on Russia, whether it's the US-China dialogue right now, whether it's trade wars and tariff tensions that we see unfolding? What's having the biggest impact?
Well, I've always said this to you, Dan, and many other, you know, interviews. We always keep the politics separated from our decision-making. And I keep getting this question always, our ministers get it always. We are aware of everything that happens in the world, we monitor, we watch, but it does not actually affect the way we make our decisions. Our decisions are always purely down to the numbers. What we see in terms of economic growth, in terms of demand growth, projections, supply growth from OPEC, from non-OPEC, and that's what it really boils down to. So we watch and we monitor. Of course, we hope that nothing happens that affects flows, you know, the normal market dynamics, because any events like this could affect the market dynamics, and then there will have to be adjustments and so forth. But for us, we keep the politics really away, and we block the noise out, and we just stay focused, laser focused on our work.